Hi,
Great. How
everyone.
are you?
Good morning, Chris. I'm great, thank you. And to good morning, Assalamu alaikum, good evening, good afternoon to everybody joining us across the world. I know we have Park Launch community is global, and there are a lot of people from a lot of continents right now that are excited to hear about your story, Chris, and actually also learn from all of your experiences. So thank you for joining us and sparing an hour with us on your Sunday. I'm going to start with a bit of a background and an introduction to Christopher Schroeder, who is our speaker for today in the Fireside Chat series. Most of you may be aware of Christopher's background, and I will actually give a little bit of the official blurb, and then I would love to hear a little bit more from Chris, you directly in terms of, what are some of the highlights that you would like to touch upon as your background. So Christopher Schroeder is an entrepreneur, an advisor. He's an investor in interactive technologies and social media. He's also the co-founder and general partner of Next Billion Ventures, which invests in and advises growth stage tech companies in rising markets. Rising markets in this case includes Pakistan, which is very exciting for us, and we'll touch upon that a little bit later in the conversation. Chris has been the CEO of Washington Post and Newsweek Interactive. He's been co-founder of healthcentral.com. He's an investor in disruptive enterprises, including Vox Media, Skift, Ibotta, Signal Labs, and also a limited partner in leading global venture capital funds. He's on the investment and advisory committees of top funds in the Middle East as well. So Chris, what an honor to have this conversation with you, and thank you for taking time. So I just read out your bio. Like, what are some of the things in your vast experience that stand out for you as in terms of what you're doing today, and you feel like have impacted how you invest today?
Well, first of all, I can't thank you enough, Misbah, for spending yet more time with me. I mean, I always love hanging out with you, and frankly, would rather listen to you than listen to me in any event.
Oh,
and
thank you. Always a pleasure.
You and Cows and I2I are, complete leaders in the ecosystem, and are one of the reasons why I'm so enthusiastic about what's happening in Pakistan. Is the same with Ali and Pack Launch. So it's wonderful to be you overall. Look, I think just two observations is, I think or maybe even one in a way, is I've been there. I think that's the kind of story of me as an investor. I've run actually several tech companies over my life. WashingtonPost.com was a big entrepreneurial experience. But Health Central, man, which was backed by Sequoia, like I had all the near-death experiences, all the frustrations of raising capital, all the pushback that you get from creating a board, and most importantly, building the culture of a team. And all my companies were global in nature, but it was actually through those companies where at first I outsourced technology to emerging markets. And then unlike a lot of Americans, I actually visited the places that I outsourced to. I had a very early lens on what was happening when technology is unleashing talent everywhere, which of course, is everywhere. And then what ends up happening when everyone has access to technology and all of a sudden they want the same things everyone else wants in the world, but they also want things which are unique to them and their background and their country and their culture, their region. And so this was almost an obvious journey of mine starting 8 years ago, where I first started in the Middle East, but now I'm out across Southeast Asia and Latin America and Africa with the partners at Next Billion Ventures. I also help Village Global. I also help Andreessen Horowitz because I'm an LP there. And I'm just a global citizen. So it's been a thrill to take this kind of background and that's sort of, I've been there, entrepreneur side of it, and leveraged into helping entrepreneurs now.
Yeah, and I actually heard you say on a Clubhouse chat. Remember when we did those? I heard you say sometime earlier this year that the Uber of Southeast Asia is not going to be Uber, and you were using that as an example to talk about how these homegrown solutions are really the ones that are going to thrive, because so much of what they're building on is actually local context, which is really important.
Well, I think the lesson, though, honestly, Misbah, for that is that it could be an Uber, but an Uber has to think differently. They have to act differently. I mean, the old American playbook used to be, as technology was accessible everywhere, is you just kind of show up and you win. And so forever, the Instagram of whatever was Instagram, the WhatsApp of anywhere was WhatsApp, and so on. But the last 5 to 7 years, this has just changed profoundly. And a lot of American companies who think that what you do is you show up, and because of software, people like the brand and they like to have the access to it, is very, very limiting when you're competing against blue chip folks on the ground who understand what their customer base wants on their term, not just a one-stop shop solution. And so to your point, it is now in the case of ride sharing, it is in Southeast Asia, not Uber. And it's all over the world. Kareem in the Middle East had to be bought by Uber because Uber couldn't beat them themselves. These are the early case studies of now what I think are literally hundreds of case studies that show that if you understand the ground, if you understand the relationships on the ground, and you can deliver to customers in their terms, you can become very large businesses anywhere.
Yeah, and that actually leads me to our first proper question, which is that you have this vantage point of having invested across several continents, LATAM, Southeast Asia, MENA, Asia itself. So what have you seen in those markets, and sorry, Africa also, obviously, what have you seen in those markets in terms of how the markets are evolving, the trajectory of not just the startups, but the investors' mindset there as well? What are some of the patterns that you have started to recognize, which are patterns for success in countries like, in economies like this? I mean, in Pakistan, we often talk about Indonesia being a sort of a good, a sort of example for us in terms of where Pakistan's market could potentially grow to. So what are some of the patterns that you've seen in some of these markets, which you think that potentially could be applied to Pakistan, which is very early in its evolution?
Well, very early, but very familiar, and quite frankly, will move much rapidly than some of the ecosystems that I would be dealing with 8 or 10 years ago, just because of the nature of dynamics we hear. I mean, I got two observations that have me speak a little bit out of two sides of my mouth, because one of them, it's a much broader lens than, look at Indonesia, or look at one market. I think the thing which is powerful for entrepreneurs today is to look at rising markets generally and finding out what fits you and what doesn't fit you and what lessons learned are not. This has been a big commitment that Rosgar, Ken, Falgu, and I have at Next Billion Ventures, and you and I have talked about repeatedly, which is, 60, 70, 80% of what an emerging market entrepreneur is facing is actually much more shared with almost any other rising market than it is with Silicon Valley. And I had this epiphany, it's actually almost 2 years ago to the day, where I spent a month in China, and I don't invest in China at all, but I was there to kind of learn the lens and to understand how they were viewing global investment. And then through Endeavor Global, by complete accident, I happened to sit in on a fintech session with some of the big juggernauts of fintech in China and a bunch of growth stage, not too early, but growth stage companies from Latin America, West Africa, and Southeast Asia. And I literally just sat back and listened. And 70% of the conversation never would have happened in Silicon Valley or New York. They were navigating last mile logistics. They're navigating regulatory environments that not only are changing rapidly, but entrepreneurs, investors are actually playing a role to change the regulatory environment or create it for the first time in spaces that are there. They're dealing in environments where you have literally hundreds of millions of people who never had a bank account. Therefore, in their product, there's an element of education you have to do. And so to me, this was absolutely riveting. And it is, well, I do this quite often, actually, not just on like public webinars, but I will take a sector like B2B marketplaces, and I literally will get a founder from Indonesia and a founder from Kenya and a founder from Colombia and a founder from Pakistan, put them on a conversation, kind of sit back, watch the magic, and the magic is very powerful. But the other side of my mouth, which is also true, actually has been really taught to me by our friend and great hero of entrepreneurship generally, Mudassir from Kareem, because one of the things that he also said is I didn't obsess too much about what was going on. I didn't obsess too much on how Grab was doing it, because at the end of the day, I had to stay hyperly focused on the way it needed to be done in different countries in the Middle East, again, because Saudi is different than Egypt and Egypt is different than Pakistan. And so my conclusion, it's a balance of both. It's an ability to garner relevant pattern recognition from markets which are like you, and don't limit yourself to any one or any one story because we're now global, but at the same time, be hyper focused of what is distinguishing in your market and move incredibly quickly in that distinction.
Yeah, absolutely. And I guess that goes for startups as much as it does for investors. So, I love what you said earlier about like actually visiting markets and actually seeing them on the ground reality. I know COVID has thrown a spanner in the works as far as travel is concerned, but hopefully as things get better, we'll have you in Pakistan soon. So what have you seen in terms of international investors looking at these kind of markets without that context, and what more do you think they should be doing when looking at doing due diligence or looking at investing in markets where they may not be as familiar? They may be coming from a Silicon Valley mindset and investing in a market that behaves completely differently, to your point about China.
People disagree with me, but the best advice I think I give consistently to entrepreneurs when I talk to them in America as well, but particularly in rising markets, is do your due diligence. Really understand the women and men who are trying to put money into you, and are they really going to be effective to you? I mean, the most powerful thing you can do is talk to one of their other portfolio companies, particularly one that might have had problems, and see. Everyone loves everybody when it's up and to the right, but what is an investor like when they're in your company and she's going through a bad period with you? You know, what are they like? Do they help you get through, and that type of thing? And I think that's particularly essential now because of what you were talking about. Because the good news for entrepreneurs is there's never been more money now coming at them. And as an investor, it's vexing because I've never seen valuations like this. But as a former entrepreneur, I love it because I know this is a good thing for entrepreneurs to have choice and have a lot of money. But I think a lot of entrepreneurs don't look at it as choice. They think, you know, I just want a branded name. And if I get Sequoia in me, then my life is safe and all my problems are done and whatever. And I don't think they spend enough time really thinking that the individual matters. Because frankly, there are a whole bunch of people right now, and I anger them when I say what I'm about to say, but I believe it. We're kind of in a new era of spray and pray. We have a lot of investors who at the end of the day say, you know, something, I'd like to get into Pakistan. And if I could put money in 15 deals that I don't know that much about them, I've never even necessarily been to Lahore or wherever, but someone tells me it's a good company and I get in early enough, yeah, most of them won't work, but a couple of them will. And as a portfolio, that will be effective to me, the investor. Well, in point of fact, that can be effective to the investor, but that is irrelevant to the value to the entrepreneur. And so the good news for the entrepreneur is there's a lot of choice. There's a discipline that she or he has to do a very powerful exercise I often don't see, which is to say, in a very painful way, this is not a 15-minute exercise, it's a real exercise. Where am I weak personally? Where am I weak in the market that I try to do things? And how can I surround myself with investors, even very early, who can help me win? Now, there's a fair answer to say, I just want quiet money and I don't care. And if I have a good brand, it will signal the next round and call it a day. I look at that as a little lazy because the beauty of this period is you have the opportunity to say, who do I want on my cap table? And is she giving me value? And then you're off to the races, I think, in a very different way.
Right. And I guess what we've seen in Pakistan, you know, as you know, in the last few years, the number and the amount of money that has been raised by startups has shot up. You know, we've already raised 285 million this year, and we just started the last quarter. In that kind of a market where it's becoming more of a founder's market, I agree with you. I think it's great to see that entrepreneurs have more choice in terms of the kinds of investors and the types of investors that they could go with. And I think that underscores even more the need to do diligence. And if you have those options, then definitely see where the value is actually coming from. And I think on the flip side, from an investor perspective, and you mentioned valuations, what we've been seeing in the market is that we started seeing valuations go up really high. And part of that is because there is real potential in the market that we're in. But part of it also is because if you're a Silicon Valley fund and you're a $100 million fund and you're investing, you know, $500,000 or $1 million in a company in Pakistan, you're not maybe thinking too much about diligence, and you're kind of writing that check. Is that something you've seen as well in terms of, I mean, I'm putting you aside because I know how much you dig deep into companies and the markets before you invest in them, but is that something that you're seeing Silicon Valley investors or other large funds starting to do as well, or is there still a gap?
Two observations. Look, I get people who are as or more successful than I am, who just push back on this entire conversation. They're like, at the end of the day, it is kind of a holistic portfolio. They get angry when I say spray and pray because they may be specific in the sector they understand something about, or they may be specific in a region, and it can work for them. And I think we're seeing plenty of evidence that it does work for them now. But I'm interested in entrepreneurs who are not just building companies for the next round and to make their investors happy. I'm looking for entrepreneurs who are trying to build companies for the ages. And I think at the end of the day, this conversation that you and I look at it, I think a little bit differently. Net will be positive with time, but it takes some discipline. I mean, at one level, if you get a great valuation from very good investors, you know, you want to get moving. I mean, we know fundraising is a terrible experience under the best of circumstances. So you want to get out there, and I get that overall. I'm not talking about spending months analyzing this. I'm just saying that even in a matter of days and weeks, you have an opportunity to sort of say who around you can really make the kind of difference and really understands you on your terms. And if it matters to you, has actually some pattern recognition, either within that market or in the way that we at Next Billion does, plenty of opportunity within a given space, but through multiple emerging markets whose insight could be valuable to you. But it's you and I both have examples of how anywhere in that spectrum works. I can only tell you the kind of entrepreneurs that I'm looking for and the kind of value that I believe in my thought process that I bring when I'm really going side by side with a woman early on, because I'm not looking at this as my up round. I'm looking at this as a partnership for something that very well and hopefully will be years.
Right, and as someone who's co-invested with you, I can vouch for that definitely being how you operate. So speaking of your investments,
and you guys are just right.
Right, and yes, which is very value aligned. Speaking of investments in Pakistan, very excited that you started investing in the country. You've invested in Bazaar, you invested in Abhi. What is your investment thesis when you look at Pakistan today? What is your perspective on the market, and what kinds of deals are you finding personally exciting in terms of what's happening in our market these days?
I'm embarrassed to say that I was a little tenuous at first in coming into Pakistan in the last year because I have not been there. And I think I found Zoom incredibly efficient. And I've done a lot of investing on Zoom in a way that if you and I were having a conversation 18 months ago, I don't think I would have imagined it. And it's been highly effective around the world. But Pakistan was new. Frankly, we ourselves were fundraising, and I was pushing my partners to stay focused in the markets and the sectors we knew very well. And it was actually my partners, and I'd like to take credit for it, but it was my partners, Rosgar and Ken, who said, "Have you heard of Bazaar?" And no, but should we do Pakistan? Yeah, no, just meet this guy. And within 10 minutes, I knew exactly why they said I should talk to them, and why this was going to be a very interesting investment, which goes to the core of your answer. I don't look at Pakistan per se as a unique thing. I look at the companies, and we certainly spend a tremendous amount of time talking about why they're unique, why they may break out in their market, if they have a market expansion theory as to why. But I like certain sectors, and I look at them anywhere in the world for which the fact that they're untouched in Pakistan gets very exciting to me. And this is also a little bit different than some of my sisters and brothers in Silicon Valley, because they often want the kind of basic, well understood, often consumer oriented tech software comes in, nothing is too dirty. At the end of the day, adoption will take care of itself. You can get GMV very quickly and all those kinds of things. I love these hands dirty businesses in emerging markets, where you've got to understand the ground. You take highly fragmented circumstances and you say, if you can only have basic technology to help them leverage their data and leverage their relationships and connect to their customers in a new way, you all of a sudden can expand them in ways that they never could imagine before. So for example, I love B2B marketplaces. 70-90% of all retail sales in places like Pakistan and East Africa and Indonesia and other places where we've invested in them, it's 70-90% of revenue is still in mom and pop shops. How is it possible in 2021 that these women and men don't have access to basic CRM tools, better logistics, and the ability for them to not only receive their supply, but able to understand it through data? And then, of course, all this data makes them great opportunities, offer them credit in ways they could never do it before. These are going to become massive businesses. They may or may not pop in the next 6 to 9 months the way some investors like, but I just have no doubt they're not going to be there. So when I sit down with Bazaar, I think to myself, these are tenacious, margin-focused entrepreneurs of high integrity. I'm like, we got to be a part of this. We've seen this elsewhere. We'll do it there. You folks brought me Abhi and Omar, and we have done payroll advance companies. In the case of Next Billion Ventures, we did in Mexico with Village Global. I did it in Mexico and also in the UK and elsewhere. And Omar had not only a great articulation about why this was an opportunity in Pakistan, he understood why there were specific things about how to do it in Pakistan, which is different than Indonesia, is different than Colombia, and is different in Mexico. And it just was a great story. And so I look at a great entrepreneur with something in their teeth they want to solve. The problem they want to solve is large. What they're offering has great product market fit, and they're going to be there for the ages, and they want someone with them that can help them do that.
That's great. And I know that because of that pattern recognition that you help bring to the table, I mean, obviously you're a great one for connecting founders to others. Not only do you host chats, but I know you've been doing it on a one-on-one basis as well. So it allows people that you're working with to actually learn from others that may be a little ahead of the curve from them, and actually, like you were saying, adapt for the local market, in terms of their own local context as well. How important do you think that is in markets like ours, where the ecosystem is really relatively nascent? We've been working here for a decade now through our sister company, which Kulsoom founded, and have really seen the trajectory of what's been happening. Much better situation now in terms of a full thriving ecosystem around it. What have you seen in some of these other markets vis-a-vis that growth of the ecosystem, and how important is it around to have been built around the startups? And how would you compare that with what you know of Pakistan at the moment, and how we're seeing this market evolve?
One of the things that is so powerful, and it's sometimes hard when markets first started rising, particularly 8 to 10 years ago, is that sometimes the early days feel a little bit of zero sum, that, who's going to get the best deals, and you kind of elbow out other people and everything else. And became very clear to me that for the best markets who have successfully run since, is sure they're very competitive, and sure the best of the best want to be with the best entrepreneurs, and sure they're going to be duking it out for the share of what they get. But there is this kind of sense that you're raising all boats, and the more boats that get risen, the more power that your companies will do, the more other companies that come, and success will breed success. And so in the ecosystems that I've seen rise very successfully in the last couple of years, it's this combination of this unbelievable focus on, we're just going to take the hill, but at the same time, very conscious around them that they're giving something back, and they're participating now. And of course, once these companies begin to become successful, they spin off their entrepreneurs who now know how it's going to be done, and they're going to give back in what they do. I mean, you and I, 8 years ago would have talked about the PayPal effect as a way that companies got spun off from a success like a PayPal or whatever. Now I only talk about the Kareem effect, because you and I run into Kareem founders all over emerging markets, by the way. It's not just in Pakistan, it's all across the Middle East, and even in one case in Southeast Asia. And you take advantage of that. Things being equal, every so often you may lose one, every so often someone may knock you out. But if you find a collection of investors, a collection of ecosystem builders, a collection of entrepreneurs who are here kind of for the long period and are willing to protect each other in the round, that tends to rise more boats, and you see a much faster trajectory. So it's a combination of both dynamics. But what has been very exciting for me in talking to you, in talking to Atif, to talking to Pak Launch and others, is like none of you hesitate. Like, you answer WhatsApp in 5 seconds, and you answer entrepreneurs whether you're investing them in or not, and you connect good people to good people all the time. And I think it's something that not only has a flywheel right now, it builds a spirit in an ecosystem that allows for plenty of competition and tenacity, but also makes the thing become whole.
Really interesting. So, as fund managers, we often there are 2 questions that we get asked almost all the time. One of them is, the Pakistan country risk factor, the macro situation, as well as the political risk. We're in a really exciting geopolitical sort of space. And the second one is around exits in Pakistan. Where are exits going to come from? What exits have we seen? And those are questions that each one of us has faced. Almost all of our fund managers get asked those questions. I'd love to understand how you, as an investor, think about these 2 things, especially as someone that is so experienced in other markets, not only in the US, but also, which is much more developed, but also in many emerging and frontier markets as well. How would you look at these 2 questions in the Pakistan context, and how have you rationalized those or dealt with them in your own investment thesis?
Well, I mean, I'm getting shivers on the back of my neck listening to the question, because this is like every LP meeting I've had over the last 10 years. And it's a very real thing. Not, it's easy to sort of throw it away and say, you're not seeing where the future comes. But I think these are exactly the right questions to focus on. And I'd give you an addition caveat to question 2 and answer question 2 first, because for many years, it's also not just been, are there going to be exits, but are there going to be another round? It's all very well to say, look, I'm going to get a good seed investor, I'm going to get a good C+ investor. I could even find an A investor. But to get to the scale that interests most investors, you need the B, the C, the D. You need the legal framework to help that to happen, and so on. And in many rising markets, that's been a problem. I think the good news, holistically around emerging markets, it's very, very clear to sophisticated, globally minded investors that this time is now significantly different. That money across these markets overall has been going through the entire pipeline to outcome. And then lo and behold, we're seeing in places like Southeast Asia, we're seeing people didn't talk about real exits out of India. And look what's happened in the last 18 months. And so people begin to understand when it happens, and it's no going back. 10, 20 years ago, it could be a one-off that would be the story everybody would use for like 10 or 20 years. And that's not the case anymore. It's now literally dozens of people who are building companies within a given market that are going either public, or they're being acquired, or in some cases even SPACing. And they're doing it at a unicorn status and or decacorn status. And I think that's captured attention. I think COVID has compounded it. The idea that not only talent is everywhere, but wants to be everywhere. And we have to expand our remit beyond 50 miles from Silicon Valley and Sand Hill Road is becoming really well understood. I think generationally, global investors are doing that. Family offices, are now in the game in a ways they're there. But you get people like Tiger who've been there before, and then you have Lee Fixel who's done this as a pioneer for 20 years. And you say, I know what's going on, and therefore I want to lean in. And you've got other people around the world, including from China, who are saying, I want to have a piece of this. But equally exciting is you've got people within Pakistan, or at least nearby, are saying, I've lived this also. And I know you have a market of 220 million people with incredible talent, with incredible digital assets it's only creating. Why would I not be trying to put some risk capital involved here? Because I could spend ridiculous valuations in the more traditional markets, or I can lean in. Now, this leads to your first question, which is political risk. We live in an environment, I would suggest to you, where pretty much every country in some form has some political risk. It's a very sort of interesting era, much of it without real premise or lessons from the past that we can use too much. But at the end of the day, when you go into earlier markets, you can't, it's not for the faint of heart. I mean, there's some investors who simply shouldn't do it. But you look at some of these people, I mean, you know, you are amazing seed and angel investors now who have spun up 20 or $30 million funds with great experience. And they're saying, I understand that, but I'm going to get in there because, again, if I can spread my expertise across enough companies, if I can look at it enough, and if I have enough learning from other markets, you know, we'll get knocked in the teeth from time to time. But net, we're in the largest trend probably in the history of the economy in our time.
Yeah, absolutely. And I think this, you know, this is this one example of, you know, whether would you rather, what kind of investor are you? Or would you rather, and I'm not directing this at you, I'm saying, that, you know, just hypothetically, are you the kind of investor that would rather invest in a pizza making robot in Fremont, California? Or are you going to be the kind of investor that's going to help bring, you know, access to finance to a country which has, you know, less than sub 10% of the population properly banked? So it also depends on that risk reward theory and how you look at the market.
I think that's absolutely true. And I think what's beautiful about the example that you used, you take fintech as an example. I mean, fintech in a way is the ultimate win-win, no matter what your interests are. If you're interested in something that's a little bit more impactful going forward, the idea that you're creating financial inclusion for hundreds of millions of people, we've seen what's happened when that happened in China. So we know what's happening everywhere. You can be a part of that. If you want returns, you have hundreds and hundreds of millions, you have arguably billions of customers who did not exist 5 years ago that exist right now. If you're a government or policymaker, you benefit unbelievably by having more people in financial inclusion and having greater data about what people need and what they do overall. I mean, it's a great virtual circle of outcome that I think is quietly bottom up revolutionizing the global economy. And so that's why, you know, people like you and I have been at this for many years, and why we welcome many more people even in the last 18 months and say the water's warm. It's dangerous. There are choppy waters, but this is a place where you want to be thinking very carefully.
Yeah, absolutely. Exciting times. So I'm going to take a few questions coming in from people on the chat as well, and I come back to some of the others that I had sort of noted down earlier. We have a question from Omar Murad, who's saying, when you look at the due diligence process for Pakistan versus other markets, how does this differ from your experience in other markets, and how do you mitigate any potential risks for a market like Pakistan?
I think that it's a unified set of experiences. There's always kind of local nuance and little distinguishing factors about things. And I ameliorate it in two fundamental ways. One, again, unlike a lot of investors, I actually do a lot of due diligence calls. And I know full well that if I'm talking to a company in Pakistan, I want to know your opinion on the entrepreneur, Misbah, personally. I'd love to have Atif's opinion. I love to have opinion for people that I know, that I trust. I have a sense of their expertise. I know that concretely about how something can succeed. And so finding that kind of network of trusted people whose judgment you can really count on, I think is very important. And again, I'm not making an argument one way or the other. I have friends who are very successful venture capitalists who do no due diligence at all. And that's, go your own path. But it is very adamant to me. It made me the fact that I ran WashingtonPost.com for several years, that I just do believe that reporting is very revealing, and it allows a different kind of dialogue with that. But the second thing, which is often a corollary of that, it's one thing to ask someone their opinion. It's another thing to see that they're willing to come side by side with you. So at Next Billion Ventures, I think this is true at Village. I think it's true in other firms. We only like to invest if we're side by side with eye to eye. I want to be side by side with a woman or man who really understands the market. It's not only helping us to do due diligence, because often, and this has happened with you and Cal's, we will do due diligence together, and I'll discover things you didn't know. You discover things you don't know.
Right.
There's pattern recognition from other markets or countries, and you do that all holistically. But at the end of the day, when we lock arms and say, now we're in this together, that's a very, very powerful thing, and it gives a lot of comfort. It's not going to be 100%, but it's going to be cover. And then the third element, once you're in the company, and I've sadly, despite everything I've just said, run into this, are the numbers real? Are you getting reported the accurate numbers? Are they being transparent with you? Are you able to dig in to find evidence of things if you think things are going south a little bit? That to me, at the end, boils down to the due diligence you've done, or the integrity and character of the entrepreneur. At the end of the day, if an entrepreneur and their CFO want to hide us, there's a probably pretty good chance here in Silicon Valley, let alone in some other market in the world, they're going to be able to fool you from time to time. And that's why I go back to what I say is, if you've got these incredible women and men who are tenacious of character and they want to solve a problem, no teeth, and they're afraid, they are not afraid to be wrong, and they know that if they've got problems, they confess them or put them out there, that means they can help fix them, then 99 out of 100 times you're probably going to be okay.
Yeah, and talking about not doing your due diligence, we have the example of Theranos and Elizabeth Holmes, which is back in the news as of late. Just in terms of investors not necessarily digging in where they really should have in a product that was very specific. So Fussy Mehta is asking, saying it's always a bet on the jockey than the horse. So when investing, to what extent is it the founders versus the idea that makes you decide to invest in them?
To me, it always starts with the founders in depth. I can tell you that probably in 90% of my first meeting with an entrepreneur, we never even get to her deck. She's chomping at the bit to put the thing up there and go through it. But I start with just trying to unpack them a little bit, why they're doing this. And, they could be doing 100 of other things. And you hardly resolve or solve anything in 45 minutes, but it starts to give you a framework by which to look at it. And once you get that kind of a comfort level, then of course it's all about product market fit. And it's about what kind of size it can be and why they believe it. I mean, you see all sorts of crazy stuff. People come with these massive TAMs and everything else. And in a first meeting, I will unpack that to some degree, though it's usually more conversational than deck. But it starts with, you're looking for the women of men of incredible integrity, and you're looking for the women and man that you can slow them down, but you cannot stop them. Like, they've got a chip on their shoulder. They got to solve the thing that they're going after, but they're also willing to listen and to look at data and realize that their thesis right now very likely could evolve in some form in the next 3 to 6 months. And you want to also find someone with that kind of a latitude. But it all begins for me with the woman and man and why she wants to solve this. And does she have the background experience to go at it and the tenacity to go at it?
Right. And one thing that we've seen in the Pakistan context, and I'm sure it's true across the world, is from an eye-to-eye, vantage point, the founders that have been the most successful, or at least have grown the most, are the ones that are open to feedback. So I think you start getting a sense of that also in a couple of early conversations. Is this person going to be able to listen to what's going on and then adjust their path as needed, and get based on feedback as well? So speaking of, you mentioned product.
Just on this one, it's an art and it's not quite a science, because at one level, yes, you want people to be unbelievably curious and hungry to get data and to understand what things are being told and come to their assessment. But you sure as hell don't want your board running your company for you. And if you ask enough people their expertise, you can get 360 degrees of answers. So it's a combination from being willing to be open to have almost a wonderment in being wrong, and realizing that's an opportunity to learn and do something better and keep moving. And then there's some entrepreneurs I see that you can feel like they're looking for someone to give them the answers, and the latter is not what I'm looking for, and I don't think it's what's ideal to build a great company.
Great. And you mentioned product market fit a few minutes ago. So we have a question from Humaira Sajjad, and she's saying, when we talk about the product market fit for nascent startups, what KPIs are counted as vital statistics for an investor? To an investor, sorry.
Well, I think a lot of it is depending, of course, on the sector and the business. And also, for example, in the B2B marketplace world, I'm not necessarily obsessed on, that they're profitable in the next 6 months or whatever, but this is an incredibly margin sharp business. It's a very outlook, what it means to get FMCG goods to people, or to get agriculture goods to people. And I want to know at least they're understanding their margins and what their path is in their margins, and they understand the drivers of the business. But I think more broadly, besides sector by sector perspective, every meeting we start talking about cost of acquisition, how they're thinking about it, and not just the monetary cost, so that's important, and we can index that to other pattern recognition we have, but their path to it. Why are they thinking about it? Some of the most, and this is a purely, by the way, rising market thing. I am backing now several companies that understand local leadership, influentials in unbelievable ways. Trust marketing, for lack of a better term. They're not just looking for the Instagram person who's got 5 million followers or 20 million followers. They're looking for local community leaders who may have 500 followers or 300 followers on WhatsApp. And they can explain to me in intimate detail why that trust marketing, the influence that woman has in their community, not only gets great customer attraction at low CAC, but they're able to keep those people for life because of that dynamic of engagement. It's a very shared thing in rising markets. And so when we talk CAC, it's not just, is it $4.50 and the long-term lifetime value is $40 or whatever it may be. It is also your process of thinking about what you're doing with that to drive your businesses. And so even in a first meeting, I'll start trying to unravel how people are thinking about how they're going to go to market and what the costs are. But to me, it's as much understanding whether they understand the drivers of their business as I'm trying to get a religious statement about what that number will be in 6 months. Obviously, a little bit of both, but it's really more their thought process and early on is what I like to look at.
Great. And since you've been interacting with a bunch of founders in Pakistan, we have a question from Mevish, who's the CEO of Invest to Innovate, our sister company. Hey, Mevish. She's saying, in all the deals that you've come across in Pakistan, how many interactions have you had with women founders or women-led companies?
I haven't done the full number. I've probably talked to 20 companies or more in recent months, and I would say probably a third of them or more are women and are outstanding. I mean, the great irony of that I find in rising markets, this was true when I really began in the Middle East writ large, is the numbers are often much higher than I see in Silicon Valley quite regularly. And there's this kind of level of tenacity and hunger and expertise, which is very powerful. I look for that in teams that I'm looking to back. I look at that in the investment group that I co-invest with and try to understand how they're thinking that opportunity. And I think their dynamics and perspectives from all sorts of experiences and backgrounds that I take very deeply into consideration, and how those perspectives and those experiences can be valuable for their insight in talking to a market and being able to drive the kind of rapid growth that they hope to drive.
Right. And I mean, as we're tracking also at our end, we've seen that in Pakistan, the numbers are still pretty low in terms of female founded companies raising funds. And let's hope that, with all of our work collectively, that's going to change with time. There's a specific question. Yes, inshallah, as we say here. There's a specific question around hardware versus software. And Dr. Hamad Chima is asking that most investments done in Pakistan have been in software-based startups and no major deal has been done in hardware. Is there a hesitation from doing so from foreign investors, or are there not any interesting deals on the table? Have you, Chris, come across a hardware-intensive startup from Pakistan?
A lot of it has to do, I think, with expertise and scale. I'm not a hardware guy, so it's not been of all the companies I've invested in hundreds of companies, over my life, both in America and around the world. And there's certainly companies where hardware is an important component of what they do, but the essence of what makes them scalable is their understanding of the data and the software service that they're offering, both internally and externally, whether it's a direct-to-consumer or B2B marketplace. And I think a lot of the really traditional venture capitalists tend to lean a little bit more on the software side. But as you and I know, there are people that are the experts on hardware investments. You can describe hardware from everything from space to all sorts of different kinds of things, and healthcare and health services and whatever. And so I think the real answer is there's plenty of capital, and early in a lot of these markets, there tends to be a software bias, see sooner, particularly at the early stage. But it really is about doing homework and finding people that really can, one, understand the nature of what you're building, and secondly, that they will be value adding when you do it. A lot of people think that there are a lot of hardware solutions which are already created and available from other markets. So they'll always press on why this is a unique application within a given market and how large that application could be. And very often I get pitched hardware plays where you got wonderful entrepreneurs who could build, I think, a $100 million business, which is fantastic for that entrepreneur. And that would be fantastic for a certain kind of investor. But it's not the kind of classic venture capital investment that a lot of people look for. And so I think it's more a reflection of just getting in front of the right woman and man, and then you have the kind of marriage that can help you do that.
Right. And building on that, a question that Kusum and I often get asked, I'm sure other our peers in the market get asked that as well, is that for a company that is in the research stage and is requires support and funding for research, whether it's biotech or another research intensive space, what are the options out there for them in terms of being able to tap into funding? Especially in the Pakistan context, even grants and all are sometimes hard to come by. So have you seen, do you see a specific kind of investor that would come in and, just like there are investors at like hardware versus software, are there those that actually would fund companies at the research stage? Is that something you're interested in?
It's not, because it's not my field of expertise, and I've actually passed painfully on several friends of biotech companies have done very, very well, but I just don't understand it, and I don't know it, and I would add very little value to them and what have you. But I mean, as you know, I mean, Andreessen Horowitz has a massive biotech fund, and so there are lots of very, very successful investors who look at this with that unique lens. I think the question always is what they're doing in the markets and the places they understand, the much larger value add. What is the unique thing that they could find in a different market that has a solution that might be better than that? It could be better because in very unique ways to a given market. It may have sales or distribution, unique attributes that could be very powerful. Certainly in the case of things which are healthcare related, some investors find appealing that it's more efficient and faster to get through certain countries' regulatory environments than others, but still, particularly if they come from the West, probably will want a requirement of, the equivalent of FDA kind of things that go through it overall. So it's a balance of the expertise. It's a balance of the trade-off of where that expertise is how. It's a balance of understanding the regulatory environment going forward. But I think the message that I'd give you, which is true throughout, and I suspect true now, is that there are a lot of investors who are very well known and very well regarded and highly successful, who were very focused geographically, who now coming out of COVID are saying, you know something, I really know small business credit better than anybody on the planet. And I'm going to be willing to look at that company anywhere now. I'm not saying I'm going to open up an office in Egypt. I'm not saying I'm going to open up an office in Indonesia, but by God, if you can bring me an Egyptian or Indonesian company that's right in the sweet spot of my expertise early, I certainly want to have a conversation in a way that I don't even think the conversation would have happened 18 months ago. And I suspect that will be the case with a place like Biotech too, which is people are going to say, we know the talent is everywhere. We know that market needs are unique everywhere. We know the distribution requirements are massive for so many places which are untapped by this. And it's not unlike my hardware answer. You just got to get in front of the right women and men who are thinking that way and have a little proclivity in their portfolio to say, we're willing to go global anywhere as long as we think the idea fits a place that it's a theory that we understand or it's a technology that we understand.
Right. So you've been looking at Pakistan for a while. You mentioned, you've been in recent days talked to around 20 founders. Have you seen more? What are you seeing in terms of the split between B2B and B2C? You already mentioned right at the beginning that your sweet spot is B2B marketplaces. You really enjoy investing there. But in terms of the market, the deals that you're seeing in Pakistan, do you see one more than the other? And is that an emerging markets thing? Is it something to do with this trajectory of the development of the market or the stage it's in?
I mean, a couple of things. I mean, look, I ran a B2C company, so I love the consumer space too. It's just that they tend to be very competitive and require massive amounts of capital. And so you need to think about that over time in the way that you try to do things. You, of course, have much better data holistically about Pakistan. Mine is anecdotal. And I suspect because of the companies I've invested in, I'm seeing entrepreneurs coming to me with a similar, understanding of what I want to do. But you and I have talked about this, and I talk about this to anybody I can talk to about. Overall, it's stunning to me that there's not really a clear outright winner of a broad definition of consumer-based e-commerce in Pakistan. I mean, again, a country of 220 million people. You've got Duraz, which is an intriguing company, as Alibaba is a partner, but it's vulnerable. It's not that large. And I've looked at a whole slew of companies that are really in some elements of very focused areas of e-commerce that I think could become much broader. And I'm incredibly open to it because I really do believe this is one of the only large markets on the planet where someone hasn't really run off with it yet. And therefore, I believe it may be run off in different ways. It's not necessarily going to be, this is going to be the Mercado Libre of Pakistan, but this is going to be maybe a series of very targeted areas, a little bit more like China, that can break out and do some very, very interesting things. So I'm very flexible at that level. I'm just looking for where there might be opportunity. Again, I just don't hardware or do that very well. And I do like these kind of B2B solutions and fintech around B2B solutions, very business oriented fintech. But I probably spend half my time looking at things that are consumer oriented, for which, by the way, often in the B2B world, there is incredible learning. And very concretely, in all the experiences I've learned about logistics and distribution and margin and B2B marketplaces has been incredibly instructive to me at looking at literally dozens of grocery related delivery companies to certain sectors of the markets across emerging markets. I'm totally in sync with the right questions to ask those entrepreneurs because of my B2B experience, even though their application is either B2C or B2B2C. And so,
Right.
you know, there's a lot of overlap in this. There's a lot you learn in fintech in the direct to consumer, which is highly instructive to what kind of data you may require in a B2B area. And of course, so much B2B is B2B. I mean, Omer's company is really B2B2C when you think about it. And
Right.
so I don't overlock myself down in that.
Great, and it just underscores why you're such a great co-investor as well. Like I want I2I to do all our deals with you because you just have such a vast depth, vast sort of knowledge in that area. When you think about the kinds of companies that you're seeing and that are coming up towards you, obviously there are people that have been introduced to you through others. What is the best way for someone to connect with you if they actually have a deck, an idea, something they've already been building? What is the best way for them? Do you prefer warm intros? Do you don't mind people cold emailing you, or is there any other medium that you prefer if somebody wants to reach out to you with a potential investment opportunity?
It's such a powerful question, and now we've really made a mark and kind of a reputation, and particularly rising market ventures. You know, my business email is almost useless to me now because it's just filled with pitches all the time. My LinkedIn is filled with pitches all the time, and it's filled with people trying to connect with me, and I feel terrible about it because I want to help any good entrepreneur. But LinkedIn, for example, I only connect with someone if I've actually know them in some form or there's some really clear connection. A lot of people fill it up for volume. I don't do it for that. And so it's a way I try to be open, and every so often someone sends me something cold that is just so compelling and so in an area that I understand, or we may share some mutual friend that opens it up. But I love nothing more than the warm introductions. It is, and my favorite introductions, I must say, and I learned a lot about this from Village Global, is, the great entrepreneurs tend to know great entrepreneurs. And so at the end of the day, if Mudassir says, you really ought to talk to this woman, I don't have to spend 15 seconds thinking about it, but that's Mudassir. I mean, the fact is now I'm invested in dozens of companies that are early stage. I've gotten a sense of the salt of this woman or man. And when she says, I've got a friend and you really got to check them out, I'm going to do it. And, anything you bring to me, anything Atif brings to me, of course, I'm going to take a call right away. So I lean a little bit warm, but my warmth is spread more widely than literally just their 10 friends telling me what to do. There's a lot of criteria and expertise that I can bring to bear that makes me think to want to do it. I must say, and maybe this is just because I'm getting a little bit older and all, FOMO doesn't drive me. Like I miss deals all the time in all sorts of sectors. And every so often an entrepreneur will try to spin me up and say, it's going to go in a day and everything else. And I won't waste their time, and I'm not going to take weeks. But if it's going to go in a day and I don't feel like I know the person at all, or if I feel that I got to do more work in order to be a better servant to that entrepreneur, I'll lose deals. And I'm willing to do that. And I regret that often, I must say. But pretty often I don't regret it at all. So that's the way it is.
Great. So a question that came in relatively early, and you can give a shorter answer to this if it's something that we've already touched upon. Zishan asked that in a nascent ecosystem like Pakistan, what would be the best way for startups to do planning ahead and in advance, including cash flow management, projections, risk management, in order to be ready for their first investment pitch? So what would be your sort of advice to founders in terms of being ready for that first pitch? If they're, as I'm assuming from his question, this is regarding a pre-seed company that's not already, or maybe a very early stage company that doesn't have all of these boxes checked.
Look, I'm not looking for 10-year discounted cash flow, and I haven't looked at a discounted cash flow at all, probably in a decade. I mean, what this really boils down is the individual and their tenacity and the experience that they can bring to bear and the story that they can have, and that they can articulate why this is a big opportunity and why they're uniquely positioned, and more importantly, their team is uniquely positioned to do it. Having said this, I just, and this is actually in a way a piece of advice, because, and I do this for entrepreneurs all the time, and a lot of people like me, I know you do this, and whatever, is that, there's nothing wrong with talking to a few people early on and saying, here's my first cut at my story. That's what a deck is. It's a story of what you're trying to do, and you can push back. I just looked at a really wonderful entrepreneur, happened to be in Latin America. He has a very big idea, and a lot of it is in his head. And his first deck was kind of all over the map. And I spent maybe 2 hours with him, kind of understanding what he's doing. And I realized in conversation, it's all in there. It's about him articulating it. And the next deck he presented was night and day. And so, for some people, this is a first time. Some people have different experience bases in it and everything else. every so often, this happens much less frequently, but it does happen. Someone will have like a 40-page deck, and I'm like, you know, what are you doing? If you really cannot articulate your story to me pretty quickly that early in like 10 slides, 15 maybe, then I think you're getting caught around maybe the wrong axle. Again, sector specific, there's reasons why some of the data and the analytics and how they think about very particular large but niche areas where some of that detail can happen. But to me, that's for the data room. That's for the next stage. That's where I can then really dig in and play with their models and really sort of get a sense of it. And again, even at that stage, their models are an indication of their understanding of the drivers of the business, not something which I look at as prophecy that if they can't get there, I'm going to say you lied to me. It's going to be, do you understand the drivers of the business and why are you making the decisions that you're making to go after them? But I think really at the end of the day, the best thing you can do is surround yourself with other entrepreneurs or other early stage investors who have an understanding of this, who can help you articulate your story and get it down in a way that really captures the imagination of a potential investor.
Yeah. And speaking of what founders are sharing with you in the initial conversations and the early story, how important is it for an exit strategy to be presented to you or to be a potential, on the table? So when you're looking at an early conversation, are you already thinking about exits? Are you expecting the founders to share something around what that exit could look like? How do you think about that from a initial interaction with a founder perspective?
I don't think there's an investor on earth that isn't thinking about where will the next round come from and will this thing have an opportunity for exit? What would that exit look like? And so I think at one level, it's very valuable for entrepreneurs to be able to say, at this kind of performance, here's the next kind of stage of money that I'd want to get. One of the reasons I want you in the company is because you can help me do it too, but I've got different ideas. But to be able to have a kind of a broad articulation of at scale where this thing could go and hear examples as to why that would be even from other markets is valuable. But honestly, I don't belabor it because in my view, if you get a company that performs unbelievably, at the end of the day, someone's going to buy a great company. I mean, I'm just convinced of that. It's obviously harder in some of these more nascent markets, but again, I think we've hit a tipping point where that risk exists and it's part of our assessment, but it is less risky now than any other time in my history of looking about it overall. But as a corollary to that, I think a lot of entrepreneurs obsess on the investor and they obsess on having investors around them because they'll get us the next round or they'll be there for the next round or they're a buy signal for the next round. And don't get me wrong, I do not think that's irrelevant. And I think there's data that even shows that if you have certain investors in you, that your odds of getting a second round go up high and all. But what I really try to remind entrepreneurs of, what really gets you the next round is kicking ass. I mean, at the end of the day, if you have a great company and you're performing, very well in a sector that's clearly a large sector, you're not going to have to worry about your next round. I mean, we're all a little bit biased in what I just said because this has been a very frothy couple of years, and obviously 6 months from now may not be as frothy as now. But at the end of the day, I still believe, even with some sine wave of global investor attitude, if you're building a great company for the ages and you're blowing your numbers down, you have the highest likelihood of finding next money. Yes, it may be helpful to have certain names involved in it and they can open up other doors for you. But that would be secondary to me if I were an entrepreneur today raising money, to just having great people who can help me win, because performance at the end of the day is going to be the biggest driver of what comes next.
Absolutely. And zooming out, with that context, a lot of companies have started to raise money. A lot of it is still at the seed stage. You're starting to see more Series A. We've only had a handful of Series B investments in Pakistan. How are you looking at that sort of evolving in the next couple of years? Like, what are your predictions for Pakistan from the market evolution perspective in terms of, rounds, investors coming in, some big names starting to invest in Pakistan? And again, like you already said, it's a frothy market right now. There's a lot of dry powder around that is chasing deals. What do you see evolving in the next few years for Pakistan? What are some of your predictions?
I mean, in a way, there's a part of me that's incredibly enthusiastic, or I wouldn't be doing what I'm doing. There's a part of me that also is cautioned from experience, because at one level, success breeds success. The more successful companies in Pakistan that raise successful B rounds based on performance and C rounds and go from there, you have, we've seen this across Southeast Asia, we've seen this in India, we've seen this in Latin America, we've seen it in America, we've seen it in China. I mean, we know that is the flywheel of success. And so one of the things that worries me about the frothiness is there are companies in Pakistan and there are companies across the world right now who are raising at unbelievable valuations. And you could say, well, I'm being an investor. $100 million cap on a company. I won't invest in that company probably more. Isn't that I work out? There's still a possibility sells, and people will want you to perform to that valuation. So if you're getting a very large valuation now, there's a pretty good chance if you got to actually you're actually doing the performance required. I think
Yeah, I'm here. Can you hear me, Chris? Sorry, just I think it might be my internet.
It's just you're coming out a little bit. But that's the way, but that is look at it. I mean, this will statistically alternative is true. If you don't form the next round, and then that'll start putting a weight holistically on companies aren't as great as we thought. I mean, there's going to be some, but I don't want people to, that was going to be the unicorn, and all of a sudden it went nowhere. There's more markets on this subject. Once more happens and there's greater success, and it's like every other market, some will become great successes, and that will just become part of it. Zoom kicked me out, so I'm sorry, but I'm back in. If I can just say thank you and goodbye for a wonderful conversation as always, Misbah. Anything I can do to be more helpful to you guys?
Chris, thank you so much. This was amazing. I mean, I could talk to you for another hour or two at least, and I'm sure everybody else feels the same way. So thanks for sharing your thoughts. Just so much there to learn from, and really excited that you're really involved in Pakistan, and look forward to continuing our conversation, and hopefully we can have another chat like this sometime soon.
Anytime. Thanks to you and to Kyles and to Ali and everybody who's with us today. It's just an honor to be with you guys. And so I'm looking forward to see you in person, inshallah, in Pakistan before the next few months. Take care.
Look forward to that. Thanks, Chris. Thanks everybody for joining us. Enjoy your Sunday.